Welcome to Kharoo channel. We are solving the exercises of depreciation chapter, and in this video we are going to solve question 8. Calculate the following. These are the basic sums of depreciation. Question 1. A machine costing rupees 23,000 is estimated to have a life of 7 years and the scrap value is estimated rupees 2,000 at the end of its useful life. Find out the amount of depreciation per annum. So the cost of acquisition is 23,000. Life is 7 years and scrap value is 2,000 rupees 2,000. And the formula to find depreciation as per straight line method is cost of acquisition minus scrap value divided by useful life. This is in years. So putting in the numbers, 23,000 minus 2,000 divided by 7. This is 21,000 divided by 7. That is rupees 3,000. This is 3,000 depreciation amount per annum. Next question, question 2. If the cost of the computer is rupees 40,000 and depreciation is to be charged at 8%, calculate the amount of depreciation. When percentage is given, the depreciation amount will be cost of acquisition into rate of depreciation. In this case, the cost of acquisition is 40,000 and the rate is 8% per annum. So, working on the calci, 40,000 into 8 divided by 100. This is 3,200. Since the rate is per annum, this depreciation amount is also per annum. Okay. Then next question, Mr. X purchased furniture on 1st October 2015 at rupees 2,80,000 and spent 20,000 on its installation. He provides depreciation at 6% under SLM method on 31st March 2016. So we are talking about financial year 2015-16. In between this year, we have purchased one furniture on 1st October 15. Furniture. Cost of acquisition will be, will it be 2,80,000? No. You know, as per accounting standard 10, the cost of acquisition will be 2,80,000, that is the purchase price, plus all the expenses incurred to bring the asset in its working condition. So in this case, 20,000 amount that is spent on installation, we will add it to cost of acquisition, 20,000. So the cost of acquisition will be 3 lakh. Then depreciation for financial year 15-16 will be 3 lakhs into 6%. 6%. So is this the final calculation? No, because we have purchased the asset in between the year and not on the first day of the year. We have not used the asset for the whole year, and so we will calculate depreciation for the period when the asset was used. The asset was used from 1st October till 31st March. So that is October, November, December, Jan, Feb, March, that is 6 months. So 6 months divided by 12 months. 6% is per annum rate, and we have to calculate depreciation only for 6 months because we have used the asset for 6 months only. 3 lakh into 6% into 6 divided by 12. This will give us this is 6% amount. 18,000 is for full year. So for half year, This will be 9,000, right? Into 6 divided by 12. So the depreciation amount will be 9,000. This is not per annum value, this is for 6 months. Next question, question 4. Messrs. Sitaram and Company purchased a machinery on 1st January 2016 for rupees 2 lakhs. Company provides depreciation at the rate 10% per annum on reducing balance method. This is WDV method, right? On 31st March every year. Calculate written down value of machinery as on 31st March 2017. In MS Sitaram Company, machinery is purchased on 1st Jan 2016. On 1st Jan 2016, the value will be 2 lakh. Cost of acquisition will be 2 lakh. No other details of other expenses is given. So the cost of acquisition is 2 lakhs. Less depreciation, which is this year, depreciation for financial year 15-16. This financial year will end in March 2016. So in this financial year, the asset is used only for 3 months, Jan, Feb and March. For 3 months. You can write this directly in calculation itself. You need not write it separately, your choice. So the working will be 2 lakhs. The percentage is 10% into 10%, and this is for 3 months. 3 divided by 12, right? So 2 lakhs into 10% is 20,000, and 20,000, this is divided by 4, will be 5,000. If you want, you can work this out on Calci. 2 lakhs into 10 divided by 100 into 3 months divided by 12 months. This is 5,000. This is for financial year 15-16. But what is the question? They have asked the written down value as on 31st March 2017. So what is written down value? After deducting depreciation, you get written down value. 2 lakh minus 5,000 will give 1,95,000. And this is the WDV as on 31st March 2016. And we want WDV for 2017. So we will have to calculate depreciation for 1 more year. This time the asset is used for whole year. So depreciation for FY 16-17, and this time the calculation will be for whole year, not for 3 months. And the most important thing is reducing balance method. We are calculating depreciation as per reducing balance method, written down value method. Then the depreciation will be calculated not on this value but this value. So the calculation will be 1,95,000 into 10%, and this is for whole year. So this will give us the depreciation of 1,95,000, and our WDV will be 1,95,000 minus 19,500. This is 1,75,500. This is WDV as on 31st March 2017. This is what the question has asked us, right? To 31st March 2017. And the last question, question 5. On 1st July 2016, Messrs. Ramai and Company sold machinery for rupees 7,000. The original cost rupees 10,000, which was purchased on 1st April 2015. Find out the profit or loss on sale of machinery by charging depreciation at 10% on original cost. Original cost, so we are using SLM method, original cost method, on 31st March every year. So let's do the working. Particulars machinery purchased on 1st April 2015 and the cost was 10,000. Then we will deduct depreciation. Depreciation for FY 15-16. Depreciation is at 10% per annum. So the value will be 1000. WDV as on 31st March 2016 will be 9,000. And we have sold the machinery on 1st July 16. So in this financial year, next financial year, we have sold the machinery. That is, we have not used the machinery for the whole year. Till the time the machinery was used, we will calculate depreciation for that period. That is from April to June. On 1st July it was sold. So April, May, June, for 3 months we will calculate the depreciation. Depreciation for FY 16-17. This calculation is for your reference. So till 1st July 2016, the calculation will be 10,000 into 10%. 10,000 because this is straight line method and 10% is the rate of depreciation. But we have used the asset only for 3 months for April, May and June. That is 3 divided by 12. This will be the calculation. The working will be 10,000 into 10 divided by 100 into 3 divided by 12. That is 250. Then the WDV as on 1st July 16 will be 8,750. And what the question is asking us to do? It is asking us to find out the profit or loss on sale of asset. The asset was sold on 1st July. Till that time we have found what is the WDV. We have the book value now. We will deduct this amount from sale proceeds. We got 7,000 from selling the asset. So 7,000 minus this amount, we got less than book value, right? So that will be loss. So we will do the working profit or loss on sale of machinery. Sale amount is 7,000 and WDV as on date of sale, that is 1st July 2016, is 8,750. So we will deduct this from sale amount and we will get a loss of 1,750. 1,750. This is the final answer. This is it for this video. If you find this video useful, please like the video, share it with your friends and subscribe for the future notifications.